The world's greatest investor has sold almost 70% of what some people think is the world's greatest company, and that is Apple. He is sitting on $300 billion worth of cash, but what is going on? Why is he doing it? Should we also consider selling shares of Apple? And most importantly, what can we learn from this, and should we also start to adjust our portfolios? The answer might actually be yes. Let's go ahead and break it down. As always, we need to set the table because there are three very big things going on here. We know who Warren Buffett is. If you don't, I have an entire Warren Buffett playlist here. He is the world's most famous investor. He is known for buying and, well, anybody who invests, buys, and sells stocks, but he is known for buying and holding stocks, particularly value investing, meaning he looks for companies that he thinks are very valuable, but they are for bargain prices. So he wants to buy a very good company for very cheap. That is the idea here, and that's going to come into play later in the video. But a company like Apple has done quite well. In fact, it's done so well that I put it in a video earlier this year because the company is up 21% in the last 6 months and up about 25% over last year at the time that we are doing this video. And again, at the time that we're doing this video, I still think Apple is good. Now, by the time most of you are watching this video, it's election day. So I don't know where Apple's going to go or the entire country is going to go by the time this video comes out. So there's that. But the time it's coming out, or the time I'm recording it rather, Apple is still a good company. But he sold 70% of it. That's a lot. And to sit on $300 billion worth of cash when your job is to make money through investing, you're sitting on a lot of money not doing nothing. So why? Why are you doing that, and what is going on? What are you seeing that we should probably be aware of? And should we start to make some tweaks and some adjustments to our own portfolio? Because what he does do can impact the entire stock market because he moves a lot of money, and it's always good to learn from those who are really the best at it. So there are three things that we should pull, and he did state these things out loud in terms of what he thinks is going on. The first one is taxes. Now you gotta bear with me because it's going to take some time to break it down, but I am going to break it down so it is forever and consistently broken, okay? The first one, again, is taxes. Now, he sold because he does believe there is going to be a tax increase. However, there are two types of taxes. Now, when I say tax increase, a lot of people get up in arms, a lot of people get upset for a whole bunch of reasons, and there's a lot of propaganda and stuff around taxes because taxes get into politics. Politics gets people riled up because for whatever reason, some people really identify with taxes like it's a football team. It is not, but whatever, okay? Now, here's the thing. Again, there are actually tons more types of taxes, but primarily for this conversation, there are two types of taxes. There is the income tax. That is the majority of what people are paying. You go to a job, a 9 to 5, you get that gross pay and you get that net pay. That's income taxes. And then you got people like hedge fund managers, Warren Buffett, investors. They have a whole different tax bracket, and that is capital gains tax. He believes that the capital gains tax is going to change. Now, here's the thing, and here is I've said it's unfair at times. You call it whatever you want to call it. Right now, I'm going to put this on the screen. Here is the current income tax bracket. Now, I'm not going to get into, because I'm not an accountant, that ain't my job. Okay, I'm on the investing side. There are two different categories and all type of stuff. But right now on this side of the screen are the income tax brackets. Okay, as your income goes up, you pay this much, and as your income goes up, you pay this much, and it kind of slots you up into those types of brackets, and that's how much you pay. Okay, it is a step. We call it progressive tax. So you don't just pay this 39% or whatever it's going to be on all the money. Okay, that's not how it works. But in either case, these are the tax rates. Now, that's only if you go to a 9 to 5. However, if you want to pay a different tax rate and you only make your money from buying and selling stocks, this on this side is your tax rate. Now, we could be the exact same person. If I make the exact same money, but I just happen to do it differently by buying and selling stocks, my tax rate is completely different because mine is capital gains versus income. 9 to 5 versus buying and selling stocks. Warren Buffett thinks that this rate is going to go up, and that's how he makes his money. That's how a lot of CEOs make their money. A lot of hedge fund people make their money through capital gains, and he believes that rate is going up. The reason why he said that he thinks it's going up is not because of who he thinks is going to win the election. It is because the deficit, the debt, those are two separate things. But he believes the debt is too high, and at some point, we as a country we got to increase our income. The only way to do that is to increase the tax base, and to do that you have to increase, because you can see the difference here. Me and you, we pay this 9 to 5 for the most part. You don't want to pay no more taxes, do you? I didn't think you did. Okay, I ain't got no more. I didn't pay what I paid. I'm good. But it looks like these people, they could pay. We could. Why we not paying the same? Why we not paying the same? Why we not paying the same rate? You tell me. So he believes that could change. And to be fair, he is actually, and I'll put an article here, he has actually advocated for this. He has advocated himself for this. Okay, so it's not me throwing out whatever agenda. He has said it himself. And he has a quote, I'll put the quote here, that he believes the tax rates are going to go up. So this is not me, this is him. He put the quote out there, this is him. Okay, but in either case, he feels that the tax rates are going to have to go up, and the math does suggest that the debt has increased. We have talked about it, and this has caused trouble in the stock market. We did have a debt ceiling fight. We have seen these things go back and forth with Congress going, shutdowns, all this type of stuff about who's going to pay these bills and when and why and all this type of stuff every 2 years because of something like this. And the types of things that we do have to pay, military, Medicaid, Medicare, that is the majority of it. Though everybody can argue some stuff shouldn't be spent here or there, a lot of it has to be spent. But that is what he believes is going to happen. Now, is that going to impact most of us? No, because it's not income taxes. It is mostly the capital gains taxes. Are capital gains taxes going to trickle down and make everything more expensive on you? The answer is honestly no. And I would say not no. It's highly unlikely, because in the last 100 years, I would say modern history has shown us that there has not been a single increase. I repeat, there has not been a single increase in taxes for the regular person in modern history. Again, I define that as 100 years. You go through and find one. You can go through and find one. I ain't seen it. Okay, so that is number one. Number two, the stock market is at all-time highs. I counted, and this is as of 2 weeks ago, we may have had one or two since then, more than 45 all-time highs in the stock market. Last I checked, you want to buy low and sell high, okay? This is that time, and I've talked about this before, take some gains. It's okay to take some gains. He has been taking gains from Apple. That is okay. Now, should you be selling 70% of Apple? That is up to him. I'm not really the one to critique the greatest investor of all time, but he's been selling off shares. The stock is up. It does make sense. I have been saying for at least a year that it is okay to sell some of Nvidia, and I have done that. I've sold, not all, but I've sold at least 25% of my Nvidia shares because it has been up, and I don't want it to overgrow and take over my entire portfolio. So I've taken and sold pieces of it just to even it out and to make sure my garden isn't overrun by Nvidia, even though Nvidia is doing quite well, and I want it to continue to do so. So I'm still going to hold on to it. I don't plan on selling anymore, and I hope Nvidia continues to do well. In my case, in his case, I think it does make sense. I just don't know if I would sell 70% of it. But again, the stock market is high. It absolutely does make sense to sell some. Is it 70%? We'll see. But also, don't forget that Apple was his largest holding by a long shot. So we have to look at his entire portfolio to see whether or not this trend makes sense. I was also the person that said he owned too much Apple to begin with. So, take that for what it is worth. The other thing I would say is, and this is something he said as well, he is someone who believes that the stock market can be too expensive. Now, I'm not necessarily somebody who necessarily believes that, but he wants to buy good companies for the cheap. When the stock market, by definition, if you are somebody who subscribes to that, when the stock market is at all-time highs, therefore things are no longer cheap. And you have to have cash on hand. You have to have cash that is ready for you to buy companies when you think you see a deal. Now, Warren Buffett is an expert at finding companies at a deal. Warren Buffett has $300 billion, I think it's 325 to be exact, $325 billion at the ready in a bucket to buy all those companies. Also, Warren Buffett is making money on $300 billion. Now, me and you don't have that type of money. Even if I had $30,000, $40,000, $50,000 sitting in cash, I'm probably not making enough money for it to really push my portfolio forward. I need to be making more money, right? For me to just have it in cash. Also, for us regular people, I'm not entirely sure if having that much money in cash really just makes sense because, again, his time frame, he's 94 already, but his time frame, I don't think that's necessarily our time frame. So while you may be sitting on the sidelines and thinking things can get cheaper, it's not necessarily the case that it will, because again, if you sat on the sidelines for the last year, or at least this year, you would have missed out on more than 45 all-time highs at this point in time. Okay, like today's all-time high is tomorrow's low. So that context is always there. I get people who ask me this all the time. People who said last year, hey, Nvidia feels really expensive, I think it's overpriced. Now look at you. Okay, people who said the same thing about Amazon last year. Now look at you. Okay, I last year didn't think, I said, and perhaps I look stupid, I thought AI was going to be a bubble. And maybe it will at some point. I don't look too smart saying that now, right? I too make mistakes. But all those stocks, for the majority of it, I think SMCI, Supermicrochip, Computer, whatever, that don't look so good, does it? Right? So some of them were not all great, but Intel being another one of those. But some of those absolutely fell off a cliff. But again, it's hard for regular people to really figure this out. Warren Buffett, not so much. So I'm not necessarily sure that we should all sell everything or sell major portions and sit in cash. I don't really think that necessarily makes sense. So sell portions, take gains, especially near the end of the year if you feel like that makes sense, and rebalance your portfolio. Yes, that makes sense, but sell everything because you think your taxes are getting higher. Be very careful. If you are a high earner, if you are somebody who makes, I would say, $250,000 to $300,000, consult with your tax professional, and then that is somebody who you should raise an eyebrow and then start to be concerned. If you are nowhere near $250,000 to $300,000 in income, this don't concern you at this point in time. And until we start to actually get tax proposals and changes are in place, nothing I would be concerned about. And also, go back and check our last video around the election and what's going to happen with tax proposals and all that kind of stuff, because the Tax Cuts and Jobs Act doesn't expire until 2026. So you still have time. And in that video, we talked about things that you could do to prepare for that as well. So again, you don't necessarily have to rush and start to make changes right now anyway. So relax. You don't have to react right now. Though, when you are Warren Buffett and you got this much money to move and you are 94, your timeline might be a little different. Okay, so for you, I don't necessarily think that you need to absolutely move right now. I do think if you have a stock that is up, and again, he's been investing for Apple much longer than I would argue most of us have, then yes, you should absolutely take some gains. I don't think the majority of us are making that much money from capital gains, so I don't think you need to be forced to sell right now. And I don't think that many of us should be sitting in cash, especially when the stock market to this point has been up as much as it has. But I will say this. Number one, shout out to all y'all. Shout out to all y'all who are in our members only, including our new people. If you are new, then you should be on the screen now. Again, I try to add people at the end of every week. And also, if you want to know new stocks, especially for this month, And for those who are looking for perhaps some stocks that are a little more resistant to what is going on in the election and all the stuff that is happening, feel free to check out this video next.